Hey there and welcome everyone to the inaugural video here at the 77 Cycle Trader channel, aka the
77.
That is correct, little princess. Today I'll provide an overview of the trading plan, give some examples, and nearing the end of the video give one or two actionable plays that are moving from a potential into a kinetic state. But prior to doing so, I just want to talk briefly on my trading story. Do you want to hear it?
Yep.
Very good, you are my biggest cheerleader. So around November, December of 2017, Bitcoin had this parabolic move. There was an exponential increase in price, and I was afflicted with FOMO. Do you know what FOMO means?
Fear of missing out.
Wow, that is a good one. You are correct, little princess. So yes, I was suffering from heavy FOMO. I wished to participate, I wanted to participate, but I just didn't know how to. Well, after searching the web, I came across the Digital Underground, which was a crypto investment group led by Dr. Boyce Watkins. Have you ever heard of that guy?
Yeah.
You have not. Stop it. Stop it. In any event, I joined his group, and doing so proved to be very beneficial because he, along with his staff, shared key fundamental crypto analysis. They instructed us, meaning myself and the other group members, which cryptos appear to be long-term potential plays, which ones appear to be bust, which exchanges were legit, which ones were not. Suffice to say, early on my portfolio grew. But after a few months, as all that euphoria surrounding crypto died down, guess what? My portfolio cratered. This, however, did not discourage me, but it did highlight something. Are you listening? Are you listening to the story?
Yeah.
Okay. It highlighted something that I had a deficiency in. I had no understanding of technical analysis. I could not read a chart. I did not understand when to enter or exit a trade. I could not identify standard patterns, whether the patterns were a candlestick pattern or a regular chart pattern. I had no idea about top-down analysis, multi-frame, multi-time frame analysis. So it was at that moment, little princess, I dedicated my time to learning as much as I could. Well, over the course of the following years, I had sleepless nights, big gains, big losses, targets hit, stop losses triggered, but out of the ashes of that, I formulated what would become my own trading style, which is the 77 cycle trading plan. The plan itself encompasses specific 77-week cycles, trend lines, price movements.
Trend lines, price movements.
You should actually host this video. You're much better at this than I am. We are also employing the stochastic RSI and the RSI. So you have a synergy that these things create.
A synergy?
Yeah, princess, a synergy. Meaning that once fused, these separate variables create an enhanced combined effect. So let's recap. I'm using a specific 77-week cycle. I'm using trend lines, price movements, stochastic RSI, and RSI levels. The product of which are better entries, better exits, just a better overall understanding of what's taking place in the market before me. So without further ado, let's just pivot to the chart so I can further illustrate what exactly I need. So we are going to start with BTC, and it's apropos that I start with BTC because my introduction into this entire space started with BTC. So what do you see before you all are horizontal support and resistance lines. As stated before, these lines are derived from specific 77-week cycle periods, and these support and resistance levels give me my entries and exits. In combination, in conjunction with that, I'm using my stochastic RSI and my RSI that is also outfitted with horizontal levels. So let's just take a look at BTC quickly. Where and how do I time my entries? I start with using the stochastic RSI. I am looking for 3 crosses on stochastic RSI. I'm looking at when the blue line crosses the orange line, or specifically the K line crosses the D line. So I'm looking for 3 crosses as I stated. You have 1 cross here, you have a second cross here as well, and a third cross, meaning crosses going to the upside. So you have 1, 2, 3. On the third cross, I am looking to enter I'm looking for my entry using one of the levels that I have. So the nearest level at this particular point is 43,548. So I have this, I have a price breaking trend line here as well. And at the same time, around here, I have the RSI breaking a key horizontal level for me. So I'll just go over it again. I'm looking for 3 breaks to the upside on stochastic RSI. You have 1 here, 2, 3. Also, before I go any further, just briefly, I've also discovered, and I'm using that in quotation marks, that there's a direct relationship between the movement of stochastic RSI and price. And it just gives me another reassurance prior to me entering trades. Once you have 2 crosses, meaning 1 cross here, the second cross here, automatically I know that there have been 2 falls with respect to price. You will see 1 fall, market pushes up again, second fall, and that corresponds to 1 cross, well, 2 crosses on stochastic RSI. And if you go to the third cross, you will notice that there is a third fall. So there is the number 3 that just comes up time and time again based on what I'm seeing with respect to market movement. So you'll see how I've gotten my entry. Now the question is, where and when do you exit these trades? And how does your plan help you? Well, I'm looking at prior to the last candle down, this first bar, the first green bar, it doesn't close above this particular level here, one of my primary levels. So with that said, I am counting 3.5 levels up as my exit. So I would start here at this primary level, 1, 2, 3. And at this particular price, that's 58,365.71. But I stated 3.5. So I would then contract the space between these 2 primary levels. And in doing so, I would get my 50% level, my 3.5% level. And if you take a look at what took place, once price got to this level, there was a reaction. That would have been my exit on this particular trade. So let's just jump on to another item. Let's take a look at the NQ. Okay, just give it a second to load. And let's see what happened. So it's the same as the other chart. You have 3 crosses on stochastic RSI, 1, 2, 3. It also corresponds with 3 falls as it relates to price, 1, 2, 3. From there you have a trend line break. Price also stops at a key support and resistance level. This time it's support. In addition to that, you also have a price break here or near on RSI. And from there, I'm simply counting because in this particular instance, the first green candle after the last fall, it actually pierced or started its run on this particular level of 14,462.25. So I'm simply from this particular point looking for my target, which would be 4 levels up, and I would start my count from here. 1, 2, 3, 4. This is my target. This is my exit. And as you can see, price ran up to this particular area. It repelled. I wouldn't even say repelled. It stopped for a day and then continued on thereafter. But this is what I'm looking for with respect to my trading plan. So let's just quickly move on to Netflix. And this is something that's repetitive. It just happens again and again. You have Netflix on the 16th of September crossing once. There's another cross here on the 22nd of September. There's a third cross here. You have in between that time span 3 falls on price. 1, 2, 3. Price at this particular time here at the third break is breaking a key trend line. It's also breaking a key level on RSI. And from here, based on this candle being the first candle after the last fall, it breaks and holds above this key level here at 591. And from there, in picking an exit, I am just simply counting 1, 2, 3, 4 levels up. And there you go. Price runs up to this particular area. It actually breaks above this area, but in the grand scheme of things, if you are taking an entry position at 591 and then exiting a position at 655, that is a great deal of money that anyone would be receiving, whether you're playing, whether you're trading shares or options, anything of that particular nature. So that's example number 3. Let's just jump on to ANET. This was a big winner. ANET, you had 1 break, 2, 3, and from here you had 1 fall, 2, 3. In terms of price action, you had a key trend line here that was broken. It actually was gapped above, and at this particular level here, at this particular time, you also had a break in RSI level. And with respect to RSI levels, in later videos I will demonstrate to you all how I came up with these specific horizontal lines. But just for the interest of time, just based on the interest of time, I will just quickly run through the rest of these. So you get your entry here. This is the last red candle. The first green candle breaches and closes above this key or primary level, and I'm simply counting from this level 4 rungs up. So let's go. 1, 2, 3, 4. This would have been my exit. Okay, so that is 351.60 to 1, 2, 3, 4 to 376.22. Let's just jump to DDOG. It's the same thing that just happens time and time again. You have 1 break, 2, 3. You have a break of a trend line. Price runs up to this key level, but never closes above it. This is the first green candle after the last red candle. I start my count here, but I am only counting 3.5 movements up because price on this particular candle did not close above this key primary level. So let's just count 3.5 up to actually ascertain my target. 1, 2, 3.5. And what we are going to do here is just simply contract the space between these 2 important levels. And what you now have is 1, 2, 3.5. This is your target. Price gets up into this target. I'm exiting the trade, and that's it for me. I'm off looking for something else, or waiting for another pullback to give me another entry, or looking for stochastic to give me another indication that it's ready to go again. Let's go to C. Same principle, just a bit different, slightly different, but this is actually a perfect example as to how you can interpret stochastic RSI. So when you look at these things, all of these different variables play an important role in my decision-making process. Sometimes price may actually play a heavier role, or stochastic RSI may play a heavier role, but I'm always waiting to combine them all. So let's take a look at C. C, you have K crossing D once, twice, a third time. You have 3 falls in price, 1, 2, 3. And I actually got into this trade here. The first candle after the fall, after the falling stop, was this green candle. It closed definitely above this support line, which it was nearest to. So I'm looking for what? 4 moves up, 4 levels up. So we started here, 1, 2, 3, 4. This was my target. This was, I won't say nerve-wracking, but it did push up. It pulled back and then continued on. But this lasted, let's see, September 30th to October 18th. It just closed recently, which is fine by me. So you had, let's recap it again, 1 cross, 2 cross, 3 crosses. You had a clear break of a horizontal level here on RSI. What didn't take place actually was a breaking of a trend line until this particular day. So I was a bit premature in actually going into the trade, but because I have traded C before, I have a greater understanding as to how it moves and things of that nature. But it is always best to adhere to the plan that you have. So let's just go to AVGO next, Broadcom. The story doesn't change. You have literally 1 cross, 2 cross, 3 crosses. You have price in terms of movement falling once, twice, a third time. After it falls the third time, this is the first bar, first green bar after the fall. It pushes up to the trend line, but it doesn't close above it. So my target will only now at this particular instance be 3.5 levels up. So I'm counting from 485 and 43. I'm getting 1, 2, 3.5. And if we contract the space between these two levels, what am I going to end up with? I am exiting the trade as it hits the 50% mark at 513.79, which is what took place. So let's just quickly run over this again. Price has 3 falls. I'm using the stochastic RSI as my timing tool. I'm also using as confirmation crosses of specific horizontal lines on RSI, and also it has to happen in conjunction with breaking of specific trend lines. Okay, and let's take a look at CrowdStrike. It's the same thing over and over. Practically, this one is a bit different, and this is why I chose to bring this one up. You had 1 cross, 2 cross, you had 3 crosses here. But what did price do? Price pushed up and fell again. What you will see on the lower time frames, and it's because I trade the NQ on a daily basis, is the only reason why I've come to understand the different movements of stochastic RSI as my timing tool. So you had 1, 2, 3 crosses. You had a false start here. I didn't take the trade because I didn't have a trend line near it in this particular instance, so price fell back, but I didn't stop looking at it. I knew that after it did this, that there's usually one hump that stochastic RSI creates, and then the next cross up that usually gives you an entry to go long. So I waited, I kept stalking it. I had I placed an alert on this particular trend line. It alerted me on this day. I didn't think it was still ready. I waited for it to pull back. I saw that it closed with this specific inverted hammer on this day. You had a red candle here. This was my first green candle. It didn't close above this horizontal level for me, primary level. So I knew that I was only looking for 3.5 levels up. So on this day, as it broke it, I went into the trade and counted 1, 2, 3. And let's just make it 3.5 to get that particular our exit. And this is here at 3.5. It got to this level. I closed the trade, and that was it. End of story. So last but not least, I did mention in the beginning of the video that I would give 1 or 2 plays that I believe are actionable. So we are just going to run right back to BTC first. And what you can see here, based on my earlier explanations, you have stochastic RSI crossing once, twice. What I'm waiting for, I would like to see stochastic, the K line, dip beneath the D line again and push up once more, and that would give you your 1, 2, 3 crosses. BTC is obviously where it's at right now, at a key trend line here. It may pull back a bit more, it may pull back into this area, but once I get my 3rd cross and I get a cross at this horizontal level on RSI or this one to give me an indication that it's ready to make another move up. I am telling you, today is the 31st of October 2021. Sooner or later you're going to see BTC get out of this funk and turn up. And it's not even in a funk, this is just a consolidation. You have, in terms of price movement, 1, 2, and this is going to be the 3rd fall. So that's one actionable item that you all can take a look at, mark down. And we have Wayfair as the other. Wayfair actually, I believe, is ready to go right now, but we'll see. You have 1 cross, 2 crosses, and a 3rd cross here. In addition to that, this is the first green candle after the last fall. This particular bar closes above this key horizontal support and resistance line, aka my primary levels. So from this particular standpoint, I am looking for 4 levels up as my target. So let's just take a look. Where are you taking this to? So let's start at 1, 2, 3, 4. I'm taking this at $314.49. So with that said, that is my introduction to the 77 cycle trader plan, and I would like to thank you all for staying with me for this extended period of time, and I would like to encourage you all to like and subscribe and leave comments.